This is why we sell options. Hey my friend, welcome back to another video. Today we're going to be discussing Tesla and TSLL, an option trade that I opened up in my last video. Before we start, just to let you guys know, I am not a certified professional. I am just a guy on YouTube, and whatever I show in this video is not a recommendation or a suggestion for you to buy, hold, sell a position. It's just what I'm doing. All right, let's get into it. So basically, I sold before earnings TSLL, which is a leverage position on Tesla. It's a 2x leverage. So basically, if the stock moves up 1%, it goes TSLL should go up 2%. If it goes down 1%, it should go down 2%. So already on an already volatile stock and company, this is a extra volatile essentially, which gives you better premium, but there's also a lot more risk. So basically, whenever dealing with a company or with a stock like this, especially if it's has some leverage to it, it's best to use caution and to manage your size. So relative to your portfolio, you don't want to have an outweighted size of this position in your portfolio. So for me, that's what I did. I opened 6 contracts expiring on August 15th. Now, when I sold this contract, the stock, the TSLL ticker, was about $12 and maybe 30 cents or so. It was in the 12s. So this is actually this is why we sell cash secured puts. So I sold the $11 strike. Let's see, where are we? Okay, so a TSLL $11 put. So for each contract, I put up $1,100 when the stock was already at $12.30, $12.40, something like that. So after earnings, we're going to get into some of the details with that. I just finished listening to the conference call. So yeah, we'll talk about that in a second. So basically, the stock dropped. If you look over here, today down 17% roughly, down about $2. So it went from, let's see, it went from, it's not loading right now. I'm in the backyard, so there we go. So it went from $12.66 before earnings down to $10.52, which is a pretty massive drop. Now, if you were to buy the shares, let's say you bought it before earnings, thinking it was just going to explode, right? You would be down like 17%, right? Probably more. But because we sold $11 puts, which gave us a big buffer, watch this, guys. Watch this. This is why we sell cash secured puts. Come on, load. Okay. So we sell cash secured puts because even though it dropped off a cliff, we're still good. I'm trying to find simulated returns. So we got paid $76 per contract, which means that $11, oh yeah, let me go back here. That $11 strike price for the put minus the premium that we got paid. Watch this, TSLL break even price $10.24, which means if the stock stays flat from this point on, now there's no guarantees that's going to happen. It can go down, it can go up, but if it just stays flat after a 17% drop, I'm still good. It's $10.55 right now. $10.55. I am still good. Now, the worst thing that could happen, the worst case really, is that I get assigned the shares and I'm forced to buy the shares at $11, which was a discount from that price to begin with. Now, what's cool about the stock market is that most things, they get priced in, right? So the market's still kind of digesting what happened on the call. And basically there's this efficiency theory that the market is so efficient that it prices in all the news, present, past, future, it prices it all in, right? So what I think is going to happen, more than likely, I mean, it dropped a lot, it could drop further as the market digests the information. More things could get priced in that possibly bring it lower. But the big elephant in the room that I see is that there's the EV tax credit going away, right? And they also talked about sequentially higher tariff costs, about 300 million higher, from what I heard, tariff costs. So there's some headwinds there with, slight increase with the tariff costs, and then the EV tax credit going away. But that EV tax credit going away, that's already public information. Everybody knows it. It's even on Tesla's website. The EV credit is going away. So short term, what that's probably going to do is bring vehicle sales up forward. So people are probably going to make last minute purchases of it before September. So that's probably going to bring up their numbers short term. But that's already priced in, all of that information. So my gut is saying it could go slightly lower. I'm guessing that it would probably stay around flat-ish around this level because things get priced in. That's just what my gut is saying. I'm also, remember, just a guy on YouTube, and nobody knows what's going to happen short term. So what I would do right now is, if you're still interested, let's say, in doing this kind of position, this would be a good opportunity probably to sell some cash secured puts. Let's say for August 15th, 22 days. Now again, another reminder, keeping position sizing small is probably the most important thing you could do. Let's say you sold a $9 cash secured put for August 15th. That's about a little more than a 3% return for a $9 cash secured put. So you're pricing in $1.50 of upside, or of downside risk, plus that premium you got paid. So your real break even would be like $8.70. So that's quite another big move down this would have to be. Definitely possible because it's a leveraged position, so it moves a lot more volatile. But I would probably go just a little bit more cautious, because 3% return is still a really good return, actually. But it's kind of cool that after selling my cash secured put at 11, which was a slightly aggressive strike, I'm still in the green. If it expires at 10.50 flat, I'm going to get assigned shares, and from that premium I collected, I'm still profitable. And then what I'll do is I'll go around and sell covered calls using my 100 shares per contract as collateral, and most likely sell the $11 strike or higher if it goes back higher. So, okay, let's get into some of the notes after listening to the earnings. I wrote down some notes here. Okay, so Elon had a lot more of a serious tone. He wasn't bringing out the chainsaw. There was no frills, no excitement. There was a lot more of a serious tone, which so it wasn't a very exciting call. But I think it was necessary. He probably has a lot of pressure. There's probably things going on behind the scenes, but it seems like the tone is more serious to perform, which for me, I took that as a nice thing. So I'm going to go with the pros first, and then some of the cons, okay? So the pros is the robo-taxi. Elon said seriously expanded the robo-taxi service in Austin area. Successfully launched with Tesla's employees in the passenger seat and with paying customers. So that's big. Now, what I think is going to happen is I think they're going to take the market share from Waymo. I think Waymo is already ahead, but their vehicles are too high cost. They're using like Jaguars, and they're using all these way too many sensors and LiDAR and more expensive material. It's not as scalable. So they have a head start, but I think Tesla is just running so much more efficiently that once it gets going, with the snap of fingers, they could have millions of cars on the roads in every major city. The big thing is getting regulatory approval from all these places, and also not jumping the gun and expanding too fast, because safety is the most critical thing. If there's even one major accident in one of these, like, it's just going to cause such big headline news. They can't afford that, like, and loss of life. It's just nobody wants to be in charge of taking a human life, right? It's like, so it's very, very critical that they expand safely. So that's also a big possible concern too, is a black swan, something like that happening. Now, Elon said, now this was interesting. Elon said that Tesla has a shot at being the most valuable company in the world, and also said the best way to predict the future is to make it happen. Now, that could be all talk, smoke and mirrors, that could be, lip service, right? But Elon has proved time and time again that, pretty much whatever he sets his mind to, he can accomplish. Just some of the things he's done is just so remarkably insane that he might just be crazy enough to do it. But again, that's just talk, right? It's talk doesn't pay the bills. We can't put all of our eggs in one basket just on lip service. So we're going to have to see that execution. But if there's one person to bet on, it's probably Elon. Probably one of the most genius minds we've had, on this planet since maybe Thomas Edison. I don't know. Okay, so he said, so this is another interesting point that he said. He said that in the next 5 years, 60 months, that he would be shocked if they are not making at least 100,000 Optimus robots a month. A month. Okay? That is crazy. That would be 1.2 million Optimus robots a year. And that's not too far in the future. So that would be actually insane. Again, lip service. We got to see this execution. But yeah, he was talking about how he's excited about the new design. They're doing like the design. I think they're on the 2 or 2.5 right now. They're going to do the version 3 Optimus, and yeah, that's really bullish. So we'll see what happens. That's a long-term game. So a lot could happen in 5 years, right? Who knows where robo-taxi will be at? But there's a lot of things in the dark right now, which, uncertainty is like the thing the stock market hates the most. So yeah, we need some certainty. But on the flip side, when things are the most certain, that's when everything is, again, priced in. So the uncertainty is what creates the opportunity. Now, I'm not trying to shill TSLL or Tesla on you or anything. I'm just giving what I think is a pro here. We're going to get to the cons in a second. By the end of the year, he said, cars should be delivering themselves in the Great Austin area or the Bay Area by the end of this year. That is huge. Imagine that. They're going to ship the cars themselves. You order it and it self-drives to your house from the factory. That would be huge. Imagine a world where Optimus robots are building all of these cars, all of them. Just imagine. And then somebody orders the car, and then the car drives itself. Imagine that. Imagine the profitability. We're not talking about the ethos and the philosophical side of this. Let's just talk about the money side. Imagine a world where all the robots are making the cars, and then the cars drive themselves. Imagine the margin. Wow. Okay, but again, that could be kind of sounds like La La Land. Let's just see what happens, right? Okay. Now, some of the cons. Okay, like I already mentioned, the EV credit going away. That is the huge elephant in the room. So all the electric vehicle companies are going to be going through this. Tesla is not special or different in that fact. All of them, right? So all of them will struggle. So the industry itself will take a big hit. I think Tesla, despite all of the political mess that happened, let's be real, that was a mess, they have the best brand in the industry. So out of all the electric vehicle makers, they have the #1 brand. They are the top selling, I think they're the Model Y might be the top selling car in the world. I'm not sure if that's just for EVs or if that's the top selling car in the world, but that is, I'll have to look back into that. But their brand, despite all of that mess, is they're still #1 electric vehicle. They're a great car, and for the price point, I think people are more than willing to put aside their branding difficulties in order to save money by getting that good of a car for the price point. Even if you hate Elon Musk, you're probably going to say, you know what, it's a great car. Forget about whatever happened in the past. It's a great car. It's the cheapest car for that quality. I think people are going to put, really the money talks at the end of the day. So best value car, I think, for the money. I want to get one day. I don't have one, but maybe that will happen at some point. Okay, another con, I already mentioned this, is the tariff costs increased sequentially by $300 million. Which I think would have been a lot worse if their supply chain wasn't so global and they're so vertically integrated. They have global supply chains. They have manufacturing in China, manufacturing in Europe, manufacturing in the US. Yeah, they're just like, they're so global, and so yeah, I think the tariffs could have been a lot worse, for them, but I think they're positioned very strategically. So so that was a con, but yeah, the biggest thing is really they're going to have to manage costs. They're going to have to manage really just short-term, demand, because of the EV tax credit going away. Yeah, so there's things that are not looking good. They also mentioned a cheaper model. I believe they mentioned a cheaper model where, it's not going to need all the bells and there's a bee. Oh, jeez. I can't stand bees. Love them, but just not near me. Okay. Yeah, basically there should be a cheaper model coming out. I don't believe that's going to be their focus, working on that model, because of this EV tax credit thing. They're trying to produce and make and sell as many of the cars that they already have as they can before they come out with a cheaper model. But I think they said that would be at the end of the year, possibly. Okay, so yeah, costs will go up near term, and they'll see shifts in demand and profitability. So those are the main headwinds, the main concerns. But overall, I think you kind of just have to have a little bit of faith in Elon. And again, I would just manage your position sizing. Compared to my portfolio, it's, I don't know, let's say a little less than 10% of my portfolio, which probably is still a little bit on the higher end. Now the stock is 1066. So if let's just see if I were to get assigned, the numbers aren't going to be perfect right here, but let's just say by August 15th, let's say I got assigned at $11, right? Remember, I got paid $76 for a contract. Now, if I were to just sell an $11 call for August 15th, I'm going to get paid $80. So once I get assigned shares, I'm going to sell covered calls on it. Or let's say you did this position and you sold puts and you want to roll the position. Then what I would do is you would basically, let's say it expired around this price. You have to buy it at $11. But if you roll it, let's say you roll it out 2 more weeks to, let's say, 1050, for example. Okay, so to buy out this contract, to buy this contract out, let's see here. So $11 put. You have to pay $1.11 to close this contract. You're going to extend it, let's say 2 more weeks to 1050, for example. So now what happens is you get the difference in collateral back. I'm going to make another video on rolling, but this is just basically closing one position, which we close for $1.11 per contract. So that's $111. What you would do is you would extend it out 2 weeks. You would lower that strike price of the put. So that would push off assignment. And now instead of having to buy the shares at $11, you would have to buy it at $10.50, right? So you're going to get the difference in collateral back. So you're going to get $500 back because of the difference from $11 to $10.50. And then you're going to have to pay about a $2 debit per contract. So for $2, you get a 50, so let's say for one contract you pay $2, but you would get $50 back in that contract going down. So that's actually good. That's a more safe, secure position, because that's basically if you don't want to own the shares and you want to push off being assigned. But if you want to get assigned the shares, then you can sell covered calls and get juicy premiums that way. But the thing is, if it goes down, let's say 50%, now you eat a lot of that because you actually own the shares. When you sell the puts, you can roll that, and you're not assigned yet. So yeah, basically that's pretty much it. That's gonna do it. My computer's getting a little bit hot. Okay, maybe next week we'll do a video indoors. That would be smart. Let's see. I do like the outdoors though. It's very nice outside. Okay, well that's pretty much it. Please leave a comment down below if you have any questions or comments on anything. And yeah, and if you want to join the Options Hero community, it's going to be the first link in the description and the pinned comment. Basically, that's a community where we basically can nerd out about options, go on live calls with me, trading, and get to ask any questions or positions. Yeah, join with the link down below. It's going to be a good time, and we'll see you in the next video.